Hello and welcome back to the NWR Virtual Investor Conference. I'm Andrew Gagan from Ausbiz. Good to have your company. Our next company is Scout Security, ticker code SCT. It's an app-based DIY home security company making security more modern, open and affordable. Based in Chicago and ASX listed since 2017. Scout has built a powerful software and service platform validated by white label partnerships spanning multiple industries and markets. Scout has made considerable progress in the 2 years since changing its strategic path from B2C to seeking to scale via white label partnerships, B2B, announcing agreements with Zigo, Black & Decker, and a 5-year commercial agreement with global security company Prosecure. And just a reminder, if you'd like to ask any questions after the presentation, do so by using the Q&A panel on your screen. Let me now introduce the founder and chief executive of Scout Security, Dan Roberts. Dan.
Good morning, everyone. Thanks for having me. Thanks, Andrew. Appreciate it. Happy to be here. So I know a number of you have seen our presentation before, but for those of you who are new, would love to give you a quick overview of our company and then hop into the updates from the last quarter and what we can expect in the back half of the year. So for those of you that do not know, Scout is a wireless home security and smart home platform. We started, basically trying to create a more affordable, more modern, simpler approach to home security and smart home technologies. So I'm going to briefly go through the background on Scout, our product suite, and then get into what we're focused on today, which is our white label model, the partners that we're working with, and some of the upcoming launches that we have. So as I mentioned, started as a very, home security focused business. We do everything end to end from the firmware on the devices all the way up to the Apple and Android applications. And we branched out into smart homes. So we do a number of different camera products, video doorbells, but all of it is no contract, there's no wiring, no hassle, and giving users total control of their home. And you'll see here in a minute what we talk about in terms of devices. You can choose the components you want, the look and feel of those components, and really have it blend into your home and blend into your life. So there's a couple key things that we like about the industry we're in, and then some of the partnerships and the way we're taking the business on the B2B side. So first and foremost, it's a large and growing industry, both domestically here in the US, but internationally. So it's estimated to be about a $14 billion industry. Most of you probably have one or more smart home products in your home today, whether that's an Alexa device or Google device or a smart security device. And key to this, and we've sort of seen the Internet of Things and the smart home industry evolve over the years. But key to all of this is having a monthly recurring stream from those devices. So a lot of the smart home devices that didn't have a recurring stream have fallen by the wayside in favor of security products, video products, and other things with a recurring stream. And we found that security is something not only people understand, they value, but more importantly, they're used to paying for. So it's another thing that we really like about this industry. Now we're going to go in through each of our partners in a little bit more depth today, but you can see some of the names there. We've established ourselves with a strong pipeline of existing and prospective white label partners. You can see Windstream, Stanley, Black & Decker, Prosecure, and Zigo, as Andrew mentioned. And we're going to talk a little bit about each of those today as we go through the deck. And then lastly, we really pride ourselves on, the flexibility of our platform, the openness of our platform. So Amazon invested in our company in 2015 through the Amazon Alexa Fund. We have all the Alexa line of devices available for our customers. Similarly, we work with Google Assistant, Yale, LifeX, Nest, on down the line. So consumers can bring their own solutions to the table that they might already have in the home, or they can also buy them from us, of course, and establish them as part of their home security and smart home setup. So I'm not going to go into each of these devices, but here you'll see a couple things. One, our entire device suite, and then two, just a quick screenshot of the mobile application. But what's important about our platform, it's very modular. So as we get into these different partners that we were working with, they can deploy just a camera, so they can do indoor cameras only. They can do just video doorbells, or they can do the whole suite of home security products, which would be motion sensors, open, close sensors, keypads, on down the line. So they can really cater it in the way that they think their target demographic will respond. And then you can see in that screenshot, everything's controlled via the app, permissions, arming and disarming, control over the devices, access to video, really quickly just access the home through your smartphone. So I want to talk a little bit about our revenue model before we hop into the partnership piece of this, because I think it's really key that you understand how our revenue model works and then how that's been tracking over the last quarter. So first and foremost, when we sign on a partner, we are usually getting a development fee. That development fee is going to be everything that needs to happen prior to launch. So any customizations that they want to make, their branding, their colors, different integrations they might want. And that can be anywhere from $50,000 US to $500,000 US, depending on the level of customizations and how thoroughly they want to augment what we already have for them. And then once we have them up to launch, and again, you'll see this pattern sort of repeating itself as we get in the partner piece of this, we generate the upfront hardware sale. So that's going to be the initial set of devices that arrive and are to be deployed into the field. And then our goal is to have monthly orders, very consistent flow of hardware sales on an ongoing basis. But that is all amounting to what we really care about, what we think drives the business and what we think investors should be judging us on is our recurring subscription fees. So whether it's a camera with video cloud storage, whether it's cellular backup, whether it's our full-on back to base police monitoring and dispatch, each of those product lines is going to generate a recurring fee from our subscribers. And so, even if we sell no more hardware tomorrow, we still have a base of recurring revenue that will continue into the future. That's really key in the smart home industry and in SaaS businesses. So we're going to walk through those partners here in a minute and what some of those recurring streams look like. But first, I want to tell you a little bit about our white label piece of it. So, from 2013 to 2017, we were specifically direct to consumer. And as we were out there in the market, realizing how much money was being spent on a marketing basis, we saw a path to a more efficient scale. Basically allowing partners with unique distribution, large marketing budgets, incredible brands, go out and acquire their customers, and they may already have a captive audience to talk to. And we power everything behind that. So all they do is have to bring the brand and the sales and marketing to the table, but we can handle everything on the hardware side, on the software side, and really cater their solution to what they want to launch into the market. So on their side, it's a very limited outlay of funds. They don't have to have a team internal to them or someone having built this over the last 8 years inside the company. And they can already, go to market from day one. As soon as we can get hardware into their hands, they don't have a year, 2, 3 year time frame to get to market. So they really like it for that reason. Very turnkey solution. And then for us, we can leverage everything we've built over the last 8 years. And each of the customizations that we do also furthers the Scout platform. We don't have to go out and spend the marketing dollars to get the customers, but we're still generating the recurring subscription from the partners as each active system is installed. So it's very attractive for us. It's a very capital efficient model to get to scale. We think there's a huge untapped market, again, both domestically and globally. So I'm going to walk you through a couple of these. I'm going to spend more time on the upcoming launch here that we have in just a few weeks, and less time on our existing partners, but I do want to walk through each of them. So first, we started with Zigo. So Zigo is a smart apartment provider. They operate in the multi-tenant apartment block space. They are owned by a large company called Paylease that has access to 12 million units domestically here in the United States. But they're a great example of how we can operate in the multifamily or multi-tenant space. Zigo has, over 13,000 units ordered, over 10,000 of those are deployed. As part of the ramp up to their program and ongoing licensing, we've generated $750,000 US in licensing fees and prepayments. And when they're, not during COVID times and at normal scale, we see them installing about 1,000 units per month in the smart apartment space. So again, every month getting 1,000 new subscribers in that smart apartment world, driving up our RMR and providing that platform in a very specific industry for them. Now, when we look at a customer like Windstream, which is a more recent customer, we just signed them in November of 2020 and have been sprinting towards a launch with them over the last 8-9 months. They are doing something on the other end of the spectrum. So they are selling to residential customers. They are a traditional telco and ISP business. They do about $5 billion in revenue every year, and they have about 1.3, 1.4 million subscribers. Now they're taking everything off the shelf from us, so not limited to smart apartments, but they're doing full residential installs, and that can range anywhere from just an indoor camera or a video doorbell up to a full-on home security suite. Now, we were hoping to launch them just at the end of the last quarter. They are still training their internal sales team right now, so that launch is imminent. We're just a couple weeks beyond where we expected we'd be, but they will be launching soon. And we've been making monthly orders for them since January. So they have a great flow of hardware revenue coming. We've already generated some of the development fees to make those customizations for them. And as soon as they start lighting up accounts here this month, then we will start getting the recurring revenue coming from those kits, from those devices. Very exciting, very good example of a telco ISP and how they could take that product, bundle it with their other pieces of connectivity. Obviously, our solution leverages ISPs pretty heavily in the connectivity it provides. Also a great product to bundle with a media package alongside an internet service provider offering. And then as we go through that, I think the last point here to mention on Windstream is, in the, I would call it medium term, so 24-month time frame, we're targeting a 10% conversion of their residential customers, of which there are 1.4 million. So we're very excited about that deal, very excited to get it launched. It's been a big effort, and I think it'll pay off for us as well. Another industry that I think is something that we see in our pipeline and is an exemplary example of a customer in the space is Prosecure. So Prosecure is a traditional home security brand operating in 26 countries. It's a multi-billion-dollar revenue company on a yearly basis. They have a little over 500,000 traditional alarm systems installed across the globe, and they are looking to work with Scout to modernize, to offer a DIY system in their various countries. And we announced in March that we launched in Peru. So they've been putting out the search engine marketing, the SEO, everything for their e-commerce business to service the Peruvian market. And we've also announced that a second country will be coming soon. So we'll be having details for investors on which country that is and what that looks like here in the near future. And again, just highlighting another industry, if you look at traditional home security, where we can go in, help the business out, modernize for DIY, for smart home, and they can really customize it for their brand without cannibalizing their base, which is a big concern for Prosecure. So Prosecure, I think, will be a build. 26 countries, we've launched in one, we're heading into the second one. We fully expect that we can launch in most of their footprint, again, over, let's call it a medium term over the next few years. So very excited about what they can do. Incredible brand. They also invested in Scout in 2018. So they put about $2 million USD into the business while we were public on the ASX. So we certainly do see them as a strategic investor in the company. And then lastly is Stanley Black & Decker. So you may or may not be, I've found that in Australia, the most common thing that everyone's familiar with is the Stanley knife. But they own, tons of different brands, including Black & Decker, Craftsman, which they bought from Sears for $900 million, have an incredible footprint across the Lowe's and Home Depot, big box stores here in the US. And, most of these brands that they own would be brands that, fathers have in their garage and get passed down to sons and things of that nature. So Stanley was very hard hit by the pandemic, as was retail in general. I think foot traffic was down 65%. So we do have an active program with them in the light commercial space, but that's not, a huge unit mover for us. The bigger play there would be one of their consumer brands in time, and we are working on that right now, or during COVID, I should say. That was paused due to the decline in retail foot traffic, but we fully expect that Stanley Black & Decker will come back around, and they've made some significant investments in the past in terms of licensing and prepaid fees to get that program off the ground. So you can see all the different types of partners. We're very bullish on the telco ISP space. We have, the multifamily, multi-tenant space. We're really finding our niche there, and our pipeline reflects that. So we still fully intend to bring on another 1 to 2 multi-billion-dollar partners here in the next 6 months. We've been adding those, over the course of the last couple of years. We recently brought on a sales executive with over 20 years experience in the telco carrier world. And we think that his connections and experience in that space will really help us continue to convert customers and partners in our white label model. So with the last couple minutes here, I want to just briefly, and we can get this deck out to anyone who would like to study this in a little bit more depth, just briefly walk you through what a generic customer might look like, what that looks like in terms of development fees, hardware fees, and then recurring revenue. So in this instance, we're assuming this generic partner has 1 million subscribers that they can tap into. We're targeting 10% penetration of that base, which would give you about 100,000 accounts, give or take. And then you look at 2 ends of the spectrum. So if they were to start at the very low end with a very cost-effective camera, which has pretty frictionless in terms of sales and getting consumers to adopt it, you're talking anywhere in the $80 range for a 2-camera kit. We've got again, we're just assuming margins here in general, 10% margin on hardware, assuming some RMR. And then on the other end of the spectrum, you have a full-on home security system, which could range all the way up to $450, $500. Again, you see the hardware margin, you see the RMR per customer go up substantially, because now we are offering not only video cloud storage, but cellular backup if their internet's down, and back to base police dispatch. So I want to focus on the RMR piece of this, because the hardware margin is great, but the RMR piece of this, on the low end, you're looking at $1.35 a month. That's per active camera, right? So if a house has 2 or 3 cameras, we're getting that on every camera, all the way up to, let's call it, $6 on full security system. And then the numbers play out at the bottom, what that turns into in terms of recurring revenue. So the point to underscore here is that can be anywhere from 1 client with 1 million subs, representing anywhere from $135,000 a month to $600,000 a month. So if you annualize that, $1.6 to $6 million a year, you can see that any one of these customers that we already have could make this business. And of course, we want to bring on as many as we possibly can. And we know that amongst them, we have a very good chance at a large scale business if these guys do anything, close to what we think they can do in terms of their forecasts and their sales abilities. And then this chart is just to show our path to cash flow positive. And so what we did was just took some numbers that are, historical. We raised $3.5 million in November. And so we started there with sort of our cash basis. We just stuck in our overhead, our audited, fiscal year 20 overhead, and that brings it back down. And then we start building back up with what we know. We know what our current annualized recurring revenue is based on our existing accounts. We have over 10,000 active accounts. We know what our hardware margin was in 2020, so fair assumption that it will increase in 2021. And then the dev fees, we're actually being very conservative here. We generated nearly $1 million last year in development fees. We've adjusted that down here to $500,000 just to be conservative. And then you start to see, you think about Prosecure's launch in Peru, the second country coming before the end of the year. You think about Windstream's launch this month, and you start to get into, okay, what's the base case, medium case, and high case, both on the hardware margin front and then on the added recurring revenue that we'll get from those accounts activating. And so this is our view, just to lay it out as plainly as we can, our path to being consistently cash flow positive. And then of course, beyond that, being profitable. So kind of lays out where we think we're headed for the balance of calendar year 21. And the last slide before we take some questions here. So I just wanted to walk through, we closed at 6.7 cents last night, about 175 million diluted shares, market cap of 11.76 million. We reported 1.9 million cash on hand at June 30. That's unaudited. That was flat from March. So, right at 1.9 at the end of March as well. You can see some of our top shareholders over there on the right. This may be a few weeks out of date, so I do apologize on the top shareholders, but that is very close. And then a couple final things just to talk through. So we have low working capital requirements, for all the reasons I mentioned about the white label model. We're not going out and incurring the customer acquisition cost, needing to wait out the payback period to make that money back. But further to that, all of our terms are at parity, meaning that we only extend terms to our clients that we get from our suppliers. So we are not outlaying large amounts of capital to buy this equipment. We are not sitting on inventory on their behalf. They own the equipment. It's all parity terms. So it's a very low working capital business. We also have low debt. So we do have, in addition to the cash on hand at 1.9, we do have a $2 million Aussie dollar facility, working capital facility, of which we've only drawn 750,000. So if we ever would need it, we do have access to a working capital line at a reasonable interest rate with an expiry next July. I mentioned the raise in November, but then lastly, and this is the point I really want to drive home before we take a couple questions. Last quarter, if you go and look at our 4C, has really illustrated how this business works. Last July, we generated $500,000 in development fees from Prosecure. In March, we launched them. So we generated hardware revenue from that launch. And now we are generating recurring revenue from new active systems coming online daily, weekly, however you want to look at it. Overlapping with that was Windstream, which signed in November. So we've been generating development fees, across the end of last year into the new year. The June 4C shows some of that hardware revenue coming through, not the full amount of it, of what they need for launch, but a decent chunk of it. So you can see now how that's starting to overlap. And as soon as they launch this month, then the recurring piece of that will start to flow through. So again, you're seeing how that model in reality is playing out and overlapping. And I think the 4C really highlights that starting to happen and what we expect to continue to happen on a consistent basis moving forward. So with that, I will take some questions. I know we have 6 or 7 minutes left here for some questions.
Dan, thanks very much for the presentation. Yeah, we do have a couple of questions. Let's get to those. Can you detail the split between recurring monthly revenue, development fees, and hardware sales for the most recent quarter?
For the most recent quarter. So off the top of my head, there's a large chunk of hardware revenue, or I should say inflows, let's call it inflows, during that quarter of about 600,000 was hardware. And then breaking it down, I'd have to go look, I don't want to say anything off the top of my head that's out of line, but that person wants to email me. It's just dan@scoutalarm.com. I could get a breakdown on the recurring fees versus development fees. But I want to say that the development fees were on the order of $50,000. Let's call it that.
Okay, a couple of questions just in relation to the Windstream deal. Can you tell us how much of the Windstream $1 million order was received in the last quarter that you announced in late January?
Yeah, so that would overlap with the previous question. So about $600,000 was coming from hardware.
Yeah. Okay, and further to that,
Andrew, real quick, I should add, we announced the first order set of over $1 million, but we have been placing monthly orders on our suppliers since we started that first order. So while that first order encapsulated the promise of Windstream and what we think they can do, it's by no means the only orders we put in on their behalf. We have been putting monthly orders in since January. So.
All right, thanks, Dan. Further to that, given the continued delay to Windstream launch, is it still possible to achieve break-even cash flow for calendar year 21? And it's noted that that would require being cash flow positive by around 1.4 million Australian dollars for the remaining 6 months of this calendar year after paying the outstanding $500,000 hardware invoice.
Yeah, I think it is, and I think it just depends on their sales efforts matching the forecast. So we look at, when we model out the different customers, we'll look at, okay, well, here's what would happen if they did 100% to forecast, 75%, 50%, 25%, right? So yeah, if Windstream's doing anywhere near what we think they can do and what they think they can do, then yes, that is still possible.
Dan, thanks very much for the presentation, and thanks very much for joining us from Scout Security.
Thank you so much. Thanks for having me, Andrew. Thank you, NWR. Thanks to everybody.